If you've been unfortunate enough that you've fallen victim to a scam, or you've lost your private key to your crypto, or you've had your crypto stolen and then are wondering how that works tax-wise, well, today I'm going to explain that for you. Hello everyone, my name is Ethan Rushock, and as I just said, I'm going to be talking about lost, stolen, scammed crypto. So it's definitely not the most fun topic, but I'm going to be talking about what the tax implications of that here in Australia are, and talking about what you can do to make sure that you've tracked this, have the right records to back you up in case you got an audit done. So obviously you don't ever want this to occur, but at least you want to make sure that if you've spent money on something, so you've invested into crypto and you've been scammed out of it, or you've lost your private key, or you've had it stolen, that you're at least recouping some kind of loss on your tax return to at least alleviate some of that pain from this situation. And just quickly, for those that are new here to the channel, I do a lot of videos on crypto tax, but I'm looking for more topics to cover. So make sure you leave a comment down below on what kind of topics you want me to cover. And if you are new here, make sure you hit that subscribe button. And for everyone, hit that like button. It really helps me grow the channel. So first I'm going to talk about lost crypto. And when I'm talking about lost crypto, I'm typically talking about when you've lost your private keys, you've lost access to the crypto. So this will normally be when it's stored in a hardware wallet, for instance, and you lose the private key, or you've got it online, something like a MetaMask, and you lose the private key, therefore you can't access it. So the ATO's definition of lost is pretty much saying that when something can't be replaced. So obviously if you lose a private key, you no longer have access to it. You can't just replace it. It's not like a normal investment where you can ring up the bank and get access to your internet banking, for instance. If you lose the private key, you've lost access to that crypto. No one can access it. Therefore that crypto is deemed as lost. So to be able to prove this, there's a range of different things the ATO say you need to have. So I'll bring them up here. So it's going to be things like when you acquired and lost the private key, the wallet address that the private key relates to, the cost you incurred to acquire the lost or stolen cryptocurrency, the amount of cryptocurrency in the wallet at the time of the loss of the private key, that the wallet was controlled by you. So examples are showing that there's transactions linked to your identity. So you may in this situation want to show that, I bought some Bitcoin through CoinSpot, for example. I transferred to this wallet address, show that transaction history, and then that wallet is where I lost the private key. So those things are going to help build your case. So I'll jump back into those last couple things, which were that you were in possession of the hardware that stores the wallet, and transactions to the wallet from a digital currency exchange for which you hold a verified account or is linked to your identity. So like I was just saying, showing that you were the person that deposited those funds into that hardware wallet is going to help prove that it was your assets that were lost. So in that unfortunate situation that you've lost your private keys to the wallet, what is going to happen is all of that crypto is going to be deemed as lost, and therefore it's going to be sold for nothing. So what's going to happen, you're going to have capital losses on those assets, and that loss is going to be based on the cost base. So a bit of example here, we'll keep it really simple. Say we bought $2,000 worth of Bitcoin and we transferred it into a wallet, and then we've lost the private keys to that wallet. So we're going to have a $0 sale price because it's lost. It's going to be written off. So we're going to end up with a $2,000 capital loss. Now the key there is it's a capital loss, which means it can be only offset against other capital gains. So we're not going to be able to offset it against normal employment income as such. Some of the other key things that I want to bring up here when it comes to lost crypto is things like, obviously the date that you lose the private key may be a little bit hard to identify, but that is going to be the date you're meant to use. So it'd be likely going to be the date that you realize you've lost the private key is a date you should realize that these are lost and realize that capital loss. And obviously in the rare situation where you've deemed it lost and then you've refound the private key, obviously you now need to declare these again if you were to sell those assets. Next, I'm going to talk about stolen crypto. So this would be likely if for some reason someone got access to your wallet, they got access to your private key and they transferred it all out and it was all stolen. So again, this is going to be a capital loss, and it's going to have a $0 sale price because it's been written off, and therefore the capital loss will be the same calculation as before. It's going to be the cost base, which is what is going to make up your capital loss. So stolen crypto is a little bit easier to prove because you're going to be able to show that it has left your wallet address and gone to another wallet address, and that address isn't owned by you, it's not controlled by you, it's not one of your assets, and therefore it has been stolen from you. You should be able to flag this in whatever kind of crypto software you're using, so you'll be able to normally flag it as a stolen asset. and then you'll be able to write that off, and it will again show a $0 sale value as such, and the loss will be whatever the cost base was. Now, the final thing I want to talk about is scammed crypto. So when you've been scammed out of something, you invested into what ended up being a scam, and therefore you've lost your money in it. So there have been some well-known examples of these. So the USI one was a big one where people were investing, they were putting their crypto in, so they were depositing Bitcoin, for instance, and they thought they were going to get all these returns, and it turned out they either got very minimal back and they lost the rest. So that is going to be a loss via scammed. So similar to the last two, it's going to be a capital loss. And again, the proof that you're looking for are things that support your case to show that you no longer have those assets. You can no longer recover them. So obviously, if there are a court case regarding to it, or there's articles you can find that back up that, yeah, this was a known scam. Sometimes scammers will tell you that they've scammed you. All these things are going to help build your case so that if you did get an audit, you can prove that, yes, I was scammed out of them. I no longer have access to them. Therefore, they're going to be deemed as being sold for nothing. There's no value to them, and therefore the cost base is likely going to be the capital loss amount. So security is a really big challenge in crypto. It's very different to investing in things like shares or when you've got money in a bank account where you've got a third party, whether it's a government institution or a bank, that's going to back it up and prove that you own those things. Crypto is much easier for people to get scammed on. Things like private keys are really important. You need to make sure you have an understanding of how these work when you're investing in crypto so you don't end up in this situation. If you do end up in this unfortunate situation, obviously these records will help back them up. Go back, watch what I've talked about, because it's really important to have an understanding of what kind of records you need to keep. And that's true in anything to do with crypto. The more records you've got, the more likely if you do get an audit, you're going to pass that. The ATO are going to go, yep, tick, 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 tick. You've done it right. You've done it correctly. You've kept all the proper records. Therefore, what you've lodged is true and correct. I hope that's been helpful. As I said earlier, make sure you leave a comment down below on what type of crypto tax topics you want me to cover next. I thank you for watching, and I'll talk to you again on the next video.